So economic data out this week tells the story of a troubled economy. Economic growth shrunk in the fourth quarter of last year. GDP growth was lower than economists had expected in 2016. Business confidence declined in February compared to January.
The economy shrunk by 0.3% quarter-on-quarter in the fourth quarter of 2016 from a 0.4% increase in the third quarter. The main negative contributors were mining as well as manufacturing. For the year, GDP growth slowed to a below-market consensus 0.3%, the lowest growth rate since 2009. Growth was supported mainly by the tertiary sectors, while the primary sectors were disappointing in 2016.
We had a bad year last year, and the number that we were talking about is a little worse than most of the forecasters were thinking. We thought maybe 0.5% growth, maybe 0.4. It's turned out at 0.3, with 2 quarters of negative growth during the course of last year. Now, the important point here is to bear in mind that the major factors that we were dealing with last year were, among other things, the aftermath of the Nenny Gate, of course, which was there for some time. We still were in a period of drought. We were seeing the tail end of the load shedding. So that combination of factors meant that it wasn't unexpected that we didn't do well, but we did a little worse than was expected.
Parsons, however, says the worst is most likely behind us. GDP growth is expected to improve to 1.3% this year, supported by better macroeconomic conditions as well as support activity on both the consumption and investment fronts. The SABC Business Confidence Index declined by 2.2 index points to 95.5 in February 2017. On an annual basis, the business climate improved slightly in February 2017. When compared to the same time last year, the index improved by 2.8 points.
Although it declined, if you look against February last year, it's still in positive terrain. So it's better than last year this time. So in that sense, I think we might say that we can look forward and in anticipation where we might be going. It's more towards a positive than the negative at this stage.
The rand weakened on Thursday to 13.32 against the dollar compared to Wednesday's close of 13.13, in line with dollar strength against some of the major currencies. The rand was a little firmer this morning, trading at 13.26 before midday. Next week, Stats SA will release data for mining and manufacturing production and retail trade sales for January. SABC News, Johannesburg.